Welcome to the What to Watch video. Every week, I prepare a number of different videos. I do a video each day, which is the real benchmark for all of my analysis. Then other videos that I do that supplement the daily video is I do a weekly video, I do an intermarket analysis video, and then I do a thing called a deep dive video where I talk about the charts that I really didn't cover. And there are some charts that are unique just to that video. Now, the very last video that I do is called the What to Watch video, which you're seeing right now. This is where I pick out the things that I'm really focusing on. There are some positive things and there's some negative things. At a minimum, I will be posting this video once a week. However, if we see a real shift in the market or something changes in the environment that I haven't really covered in this particular video, I will do an update to this video on an as needed basis. So at a minimum, it'll be once a week and then kind of as needed after that. This is being prepared for Monday, March 11th. The first thing that I do is I go through and look at the things that are positive right now. First, I go through a list and then I show you the charts. First of all, the markets are anticipating rate cuts to be slow. That is really the scenario that's being put forth right now. The Fed looks like they're done raising rates. They are possibly going to be cutting rates at some point in 2024. And because of the way the economy is right now, it looks like those rate cuts will be slow, and that could be positive for stocks. And I have a chart to show you the research there. All of the indexes right now, except for the small caps, did set all-time highs this past week. We even had the mid caps participating. The real laggard right now is the small caps, but we have the Dow, the NASDAQ 100, the NASDAQ, the S&P 500, all of those are setting all-time highs. And then there are additional indexes that further break down the market that are also setting all-time highs. And that's a positive thing in and of itself. Right now, as it stands for Monday's session, our technicals are positive. So we have a positive stance on the market when we take everything together. But at the same time, we're seeing some extreme positive readings in the short and intermediate term. And you could make a case to suggest that we're overbought. When the market becomes overbought, that's usually when we see some kind of a pullback. Now, in Friday's session, we started off really positive, and then we hit a resistance level and then spent the rest of the day pretty much declining after that. That is not really what the market was anticipating. And that's really making things at least question it for right now to say, is weakness starting to develop? There's always positive things and there's always negative things. What I do is I take everything together and I reach a consensus with, okay, what's winning out based on what our charts are telling us. I try not to come up with my own opinion about things. I try to let the charts actually tell us what's happening. But we might be seeing some weakness developing. But for right now, we are positive. The S&P 500 is still above a very long-term resistance line, and I'll show you that chart. The end-of-day growth to value ratios that we've been watching, they're still holding up for right now. They're not really breaking out to the upside, but they're not falling apart either. Discretionary to staples, this is also doing okay. Not great. We'd like to see it doing better, but it's still hanging in there for right now. And when you see growth outperforming value, that tends to be more positive for the market. When you see discretionary outperforming staples, that also is positive for the market. The S&P 500 is in an uptrend, but it fell below this shorter term trend line. And I have a chart to show you that. We've been hitting that and staying above this shorter term trend line for quite a while. Well, in Friday's session, we dropped below that. The bullish percent index, which I think is a very important indicator, because it's not moving average based. It's measuring the point and figure buy or sell signals. It's continuing to go up, but when we get a reading above 70, that's when it starts to get extreme positive. But for right now, it's still going up, even though we had a down day on Friday. And then a number of different moving averages that we look at. We look at a 20, a 50, and 200 period simple moving average. All of these together, and they're on two different charts, they're negatively diverging in the longer term. But over the past week, they have been showing signs of improvement. And we're also seeing an improvement with the NYSE when we compare price and volume together. And then we're still looking at the QQQs and the NASDAQ 100. All of the different trends for right now in the short, intermediate, long term, and very long term continue to be positive. And I have charts of all of these to show you what I'm talking about here. And the dollar has been declining over the past week. Typically, when the dollar goes down, that gives support to stocks. The stocks like a weaker dollar. It has been declining, and that's been helping stocks to go up. Here's a chart showing that some research that says when the Fed has the opportunity to cut rates in a slow way instead of reacting to an emergency situation, that tends to be more positive for the market. When they have to cut it because something really bad has happened, that tends to be more negative for the market. Now, all we can go with is what we're seeing right now. A catastrophe could happen at any time. A catastrophe might not happen. We might maintain the status quo for right now. And if that's the case, and the Fed's able to cut rates in a slower fashion, that will end up being more positive because they're adapting more to what's happening in the economy. Also, this is a weekly chart of the S&P 500, and we have a pivot point here. The cool thing about pivot points is that they're on the chart before we're even there as far as time and price. This line up here at R1, this has been on the chart for a long time. We came up to that level, and then a week or so ago, we hit that level and came back down. This was longer term resistance. Then we were able to break above that. We fell down below it. Well, by the time we finished this session on Friday, we're still above this level for right now. Now, why is this important? Well, if you go back to the end of 2021, we hit another one of these pivot levels, went a little bit above it, and then we spent the year 2022 really being under a lot of pressure. Then in 2023, we were humming along, doing really well. We hit one of these pivot levels and then spent the next few months going down. This is really a tug of war going on right now between the bulls and the bears to see, are we going to stay above this R1 level and go higher? Is this going to be overhead resistance? And I'm still calling it resistance because we haven't been above it long enough to really have it count as support. Or are we going to start to come back down from this level? Right now, we're positive because we're above this level. And this is at about the 5110 to 5111 level. If you want to make a mental note of that and be watching those levels for the S&P. Also, another thing that's positive, the small cap growth to value ratio, when we look at the end of day charts, it's still positive. Yeah, we pulled back and we're chopping a little bit sideways, but recently we have been breaking out. Now, that's not really doing much to help the small cap index. They still have a long ways to go to make a new all-time high, but the fact that this is going up means that there is some buying coming in. Also, the mid caps, which did set an all-time high earlier in the week, we're seeing more of a sustained uptrend when we look at the end of day chart here, even though we did decline in Friday's session. But this is still looking positive on an end of day basis. And then this is the one that I focus on the most. This is S&P 500 growth to value. Then looking at the ratio where, yeah, it fell back, but we're still in a longer term uptrend and we have been showing a real improvement. Now, when the growth to value ratio is going up, that gives a lot of support to the S&P. Now, there are times when we see this ratio going down and the S&P can still go up, but we spend time going sideways and we stall out. When we see a lot of real strength in the market is when this ratio is going up and the S&P 500 is going up as well. Now, it's positive for right now. If we see this really start to come down and turn more negative, then we'll have to switch it over to our negative list. And so this will be one thing that I'm watching. Then we're also keeping an eye on a ratio between discretionary, the things that make life fun, and staples, the things that you have to have. And the area that I focus on the most is down here where we look at the ratio itself. We want to see discretionary outperforming staples when the market is more solid. In 2023, the three biggest sectors were tech, communication, and discretionary. Well, discretionary has really fallen on hard times lately. And this is a chart of discretionary. When we were going down, we've been pretty much going sideways right now. Oh, I'm sorry, that's staples. Discretionary had been going down and we have been bouncing up and we are in an uptrend. One thing that I did want to point out here in reference to staples, we're starting to see this go sideways and we might be seeing a death cross with this equal weight ETF. So we'll be keeping an eye on this. We want this ratio to go up, but for right now, it's hanging in there. It's just doing okay. Then this is the short-term trend line that I'm talking about. I just drew this from the October lows, and then I connected some lows that we hit here and then extended the line forward. We had been above this trend line. Well, after Friday's close, we ended up coming down below it. And not a huge factor right now, but we've been kind of riding this trend line as we've been going up. The fact that we closed below this is like the first line of defense. And we'll be watching underneath this, which is the 20-period moving average. So far, we're still above that, and that's positive, but we'll be watching that level as well. In fact, here is the 20-period simple moving average. We're still above this. Now, we came down close to that earlier in the week. We ended up bouncing off of the 20-period moving average for the NASDAQ 100 or the QQQs, and that's where we found some support. So we didn't come all the way down to the 20-period moving average with the S&P 500. If we see more weakness, we'll be following these lines to see if, now we might go down below them, but it's where we close. That's the most important thing to watch. Then we're looking at the bullish percent index, which, as I said earlier, this measures point and figure buy or sell signals. We are above 70, so we're looking extreme positive, but we are going up. And we saw this going up on Friday, even though the S&P closed down. As long as this continues to go up, that is still positive for the market. Then we're looking at the stocks inside of the S&P 500 and how are those stocks, are they above their 20-day moving average or below it? Well, we've been seeing a longer-term negative divergence here. But in the shorter term, we're seeing an improvement with this measurement right here. And if we can keep going up with this measurement, we might negate this negative divergence that we've been seeing. We also look at the 200-period moving average study. This is showing some improvement as well. We're also getting up to a level. Now, this is kind of one of those double-edged sword type things where we're showing a nice strong reading compared to the 200-day moving average, but this means 90% of stocks are above their 200-day moving average. And when we get above this, that means that we're extreme positive with this particular indicator. So yeah, it's negative in that it's improving, but we're also getting extreme. Then the one that's kind of lagging behind, this is the 50-period moving average study. We're still seeing a longer-term negative divergence, but we have been seeing some improvement here. If this can keep going up, that would be more positive. And then we are seeing an improvement here when we look at a cumulative NYSE advanced decline line, where it's continuing to go up, even though we had a slight down day on Friday. And we're also seeing the regular advanced decline line continue to go up. This is suggesting that we're seeing more broad market participation. This is another look at just NYSE common stock. We have price up above and volume down below. Now, last week when I did this video, I pointed out that we were seeing a negative divergence. Well, this week that got taken care of. You see how we're breaking out over here on the right with price? We're now also breaking out with volume. We weren't seeing that. We were seeing volume lagging behind, and the fact that this is showing some improvement is more positive for the broad market. Then here's the QQQ, where earlier on, we did come down to the 20-period moving average, and then we were able to bounce off of that. Now, we're not too far above it right now, but so far we're maintaining price above that 20-period moving average. The blue line is above the red line. That means that the short to intermediate term trend is positive, and we're above the 200-day moving average, so the long-term trend is also positive. This is a weekly chart of the NASDAQ 100, and we're above this long-term trend line going all the way back to 2009. We'll be watching this level. If we can stay above this, that's longer term positive. And we are positive for right now. If we fall below that, that may suggest that some weakness is coming into the market. The dollar, this has also been positive the last week or so. We've been seeing this going down. It has been recovering since the beginning of the year, but lately it's been falling back and it's still in a longer term downtrend. And that tends to be positive for stocks. Now, we look at some of the negative things. Now, these could always switch over. Some of the things that were on the positive list last week, they're now on the negative list and vice versa. These are just things that look negative right now, but if they do show some improvement, that could easily change over to positive. We look at the intraday growth to value ratios. These are showing some weakness, and I have charts to show you this. Sentiment, we had become extreme positive. We were above a level of 75. And that just means the market's a little too happy, and we're starting to come down from that level. If we continue to fall, we'll probably see stocks continue to fall as well. Then the point and figure chart is giving an extreme positive reading, and this is a very rare occurrence, something that I've never seen very often here. It's looking positive, but it's saying, okay, maybe I'm looking too positive, and I'll show you that chart. And then we've been seeing the VIX, and this is the fear gauge. Ever since the beginning of December, we've been seeing the VIX chopping a little bit higher, even as stocks are going up. That means that fear is starting to increase as stocks have been going up at the same time. Typically, when stocks go up, the VIX goes down. But sometimes we've been seeing stocks going up and the VIX hasn't really been going down. And on some days, it's actually been going up. And then we have a thing called the Chaikin money flow. This is a smart money indicator. It's positive for right now, but it is declining, and that's causing some concern. We also have another measurement between positive and negative called the vortex. The green line is on top, so it's positive, but it's also declining, and I'll show you that chart. The transports are negatively diverging from the Dow and S&P. That's longer term negative, and that's actually getting worse. Small caps, even though they were the only index that was up this past week, they're still underperforming, and I'll show you a chart of that. We also look at a ratio between the NASDAQ 100 and the Dow. We're right at an all-time high, a previous all-time high. This is a chart that the bears, perma bears, they're really focused on this chart, and they think we're just going to fall apart after this. I'll show you that chart. We also look at a similar ratio, the QQQs to the small caps, or the IWM. This has been declining after it set a previous high at a overhead resistance level. And then we are supposed to be in a time of weak historical seasonality. The market isn't really showing that, at least yet, but typically right about now, we often see some weakness. Okay, here's the intraday chart. The red line is value, the blue line is growth. And see how the blue line is coming down below the red line? Now, these are independently plotted on this chart, and they are on different scales. But when the blue line is above the red line, that tends to be a lot more positive for the market. And this is a 10-minute intraday chart. We want to see the blue line back on top to turn more positive. If we see the blue line continuing to decline, that would be more negative. And then we look at a ratio on a 10-minute intraday chart between S&P growth to value, where it had been showing some improvement, and then we got up to Friday's session, and now it's been starting to fall back. We just want to keep an eye on this. Then here is the fear and greed index. This is called sentiment. We were getting a high reading above 75, and now we're starting to decline. Now, we could go back up, and we'll probably go back up if stocks go up. But if this continues to fall and we see more weakness in the market, then we'll probably see the sentiment gauge continue to fall as well. And then another thing, and this seems to be the curse. This is Barron's that put out over the weekend, and they call it the cover curse. That whenever they put a cover like this, that, you know, while the stock market keep going up, will the stock market keep going up? What to know is the S&P 500 hits new highs, and it's got these bullhorns crashing through here. Okay, a lot of times there are people that go out there and they look at magazine covers, and when they're all bullish, that's time to sell. When they're all bearish, that's time to buy. I don't know if this really means anything or not, but the fact that Barron's had this on their cover could end up being negative for the market. This is the point and figure chart, and we don't take time into account with a point and figure chart. We just go with price. And if we go up enough in price, an X is drawn. If we go down enough in price, an O is drawn. This is kind of like a football chart here. But you can see how all these X's are really going up. In fact, it's really, really going up enough to actually give us a warning sign here where a long, tall up. Maybe the point and figure chart is saying, okay, this is freaking me out a little bit here. We're going up a little too far, too fast. We haven't seen any kind of a substantial pullback. Now, that doesn't mean things are switching negative, but for a positive thing to be happening and for the point and figure chart to have a negative signal, we just want to pay attention to that. Then we're also looking at the VIX, where I have a line chart and a bar chart here. And we've been seeing a series of higher lows, even though stocks have been going up, both with the bar chart and the line chart. That's a little bit concerning. That means that fear is going up. That means there's more hedging going on. And when more hedging goes on, that means that a lot of the smart money, they're concerned about a decline. And so they're trying to protect some of their positions. Now, we're not getting any kind of excessive readings right now, but we are seeing a gradual increase when we look at this chart. We're also seeing a momentum since the beginning of December. The MACD is what I use to measure the momentum here. We had been going up and then we started to come down. Well, now we're starting to cross back over positive again. So we're seeing that on a trending basis, and we're also seeing it more on a momentum basis. Just something to be aware of. Doesn't predict doom and gloom, just something that we want to know is out there. This is the Chaikin money flow, and it's still positive, but it has been declining. This tries to measure what the smart money is doing. And the fact that this red line is going down and the indicator is going down, that's something we want to be aware of. And the vortex, it is still positive, but see how we're just going lower, lower here. We're setting a series of lower highs. Now, in a little bit, you could say lower lows. And in a real positive environment, we want to see this green line really going up. And it looks like it's actually getting exhausted right now. Now, it will turn more negative if the red line crosses above the green line. So it's still positive for right now. Just something to keep an eye on. And I go over all these charts in the daily videos. This is longer term, and I haven't been going over this because it's just the same thing over and over. We've been close to setting all-time highs with the Dow. We're just chopping sideways with the transports. In Dow theory, that is a negative divergence. We want to see the transports doing better than they have been. This is a chart just of the transports where we're just not going anywhere. We're not breaking out above previous highs, let alone the all-time high. And if that could really get in and get going to the upside, that would really help the market. Here's another look at a ratio between the transports and the S&P 500, where the S&P has just been outperforming as transports just keep going down, 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 down on a ratio basis. And that's not good for the market. Here's small caps. Even though they were the one index that was up, they're still underperforming the S&P when we do a ratio between the two. So we're just not seeing any real strength in the small caps. We're seeing some in the mid caps and we're seeing some in the large caps, but we're just not seeing much in the small caps. Then here's a longer term ratio from the NASDAQ 100 to the Dow, or this is growth to value. And we set a high way back in 2000, and that ended up being the top. And then we saw the dot-com bust after that, and it took us over a decade, like 15, I don't know how many years, long time to get back up here, 20 years maybe. At the end of 2021, we hit this level again, and then we went into 2022. Well, now we're going a little bit above it. But this is a chart that the perma bears are just going, they're just salivating looking at this chart. Sure enough, thinking that we're going to hit this ratio and we're just going to tank and everything's going to fall apart. Well, the thing that would negate that is if we see this ratio continue to go up, and we are a little bit above it right now, but this takes a long time to develop. I've been watching this chart for quite a while. This is a similar ratio, the QQQs to the small caps or IWM. We did hit this previous high here, and now we're starting to come back down. This is a little bit of a concern. If this continues to fall on a longer term basis, then that could be more negative. That just means that the QQQ is starting to underperform the small caps, and the small caps are still pretty weak. Just something to be aware of there. Then here we're looking at seasonality, where we see a little bit of a tick up at the beginning part of March. Well, now we're starting to get into the middle part of March, where we typically see some weak seasonality until about maybe closer to the end of March. But the market really hasn't been following seasonality right now, so it could buck the trend still. Here's another look at that when the sitting president is running for re-election. This is about where we are right now, this purple line. The line that we're really focusing on is the, okay, this is different than what I've been showing. This is the green line. On the daily chart, it's a black line, but this also shows some negative seasonality going into the latter part of March. Now, doesn't mean it's going to play out this way, but this is historically what has happened during an election year. Thank you. I hope you find this helpful. Please, please, please look at the daily videos. Please check out the other videos that I post. That'll give you much better context for the approach that I use for evaluating the market. I hope that you're having a really nice weekend, and I will talk to you in the next video.